Hi, this is Joseph. In this video, I'm going to talk about the trading system that I manually use to execute. I manually execute all of the trades with the TradeCopier service. So this is a question that I get on a pretty regular basis. And that question, for the most part, is what kind of trading system am I using? Is it technical? Do I trade around the news? Or is it some kind of automated system? So the first thing that I'd like you to know before you sign up to use the TradeCopier is that this is not an automated system. It's actually me executing each one of these trades, and then I manage these trades, and then I close out the trades. And the TradeCopier duplicates all of the behavior that I perform inside of my MT4 account. It duplicates that inside of your MT4 account instantly. Like, it's just within a split second. It's very, very fast. So my trading experience, I've been trading for 20 years. I started back in late 2000, early 2001, and I started off trading futures. I was trading the E-mini S&P, and a few months after that I found out about Forex, and I started trading Forex. I opened up my first account with FXCM, and this was way back in 2001. And I've been trading both futures and Forex ever since. I also trade crypto, and I trade oil, gold. I do trade some stocks in my own private account. But the trading system that I'm going to show you, I'm not going to go into too much depth because it would take like a couple of hours to explain everything that I'm doing, but I want to give you a good sense of what it is that, how I trade, what it is that I'm doing. And I think that you really need to know if you're going to use my TradeCopier service, because it is ultimately, it's your money, it's your trading account, and you need to know who's trading for you and how they trade. Again, and also how much experience they have. So again, I've been using this system for about 20 years. And what you're looking at right now is the pound. This is pound futures, and I traded the pound dollar, and I'll show you the actual trade on the pound dollar and how it paid and how it performed and how I got into the trade. So when I first started trading, I actually started using candlestick patterns, just like most retail traders do, and I didn't spend too much time learning how and why price moves. That was sort of a mystery to me, as it is to many retail traders. When they watch price moving around, they don't really understand the mechanics. They don't understand what's going on in the background, who is moving price. They hear stories or suggestions about, the banks are moving price or smart money's moving price, but very often people still don't understand what that really means and how they do it. So I spent, in the early part of my trading career, I spent a lot of time studying some of the old traders. For the last 100 years, the successful ones, the traders who have been trading without the use of computers, and how they were able to track and trade along with smart money. And that's a very important skill to master if you're going to continue to trade. And that's actually what I do here. So what you see here is I'm measuring and counting the waves. It's a phrase that I kind of put together, but basically I'm looking at the waves, and I do this on different time frames. So for the most part, I'm going to execute a trade off of a 5-minute chart, a 30-minute chart, or a 1-hour chart, and then I pay attention to the 4-hour and the daily, the weekly, and the monthly, so on. So for day trades, and I'll show you how this all set up here on the pound dollar. So for day trades, I'm looking at basically areas of consolidation. I'm looking for a very choice trade opportunity and a location to get into the trade where it's likely to take off and move in the direction that I'm trying to trade it in. And very often with my trades, when I get into the trade, when I use this system, when I get into the trade, it moves to the target relatively quick. So you'll notice that very often I don't trade inside a consolidation like this. And this is where it gets a bit choppy. Now, when I first started trading, I made the mistake to try to trade inside of these ranges. And the reason that I was doing that was that I didn't understand these concepts of analyzing the phases of consolidation. There's phase A, B, C, D, and then we get the breakout. Analyzing the phases of consolidation also helps me track the footprint of smart money. And I can see where smart money is starting to step in and acquiring the shares. For example, let's just say shares, if this was a stock, for example, it works either way, whether we're looking at currencies, crypto, regardless, they're still going to acquire in this area or range of accumulation. This is basically consolidation. So smart money will acquire down here at the lows. They generally do not do that up there at the highs, because at that point, in some cases, they can't control. What they're trying to do is methodically control price and price action. And you'll see that volume starts to pick up here at the lows. So that's what I'm tracking for the most part. And then I can see the final moves to the downside where smart money is actually testing the market to see if there's anything left available at that point as far as the supply. And when they've acquired as much as they possibly could for this initial campaign before it starts to move up like this, I can see that happening right here in phase C and D. and then I see volume start to pick up. So this is real volume. This is not tick volume. This is real volume on these futures contracts for the pound. So again, I'm actually seeing what's going on here in the market, and I see where smart money starts to initiate their move as it starts to break out to the upside. But I want to show you how I pinpoint my entry. So I do sometimes get entries with just candlesticks or bar charts like this if I can track smart money and it prints certain signals and I can see the divergence. And I'm also analyzing the phases. Again, analyzing the phases is what tells me when I can get into the trade and where I should stay out. Again, in phase B, I do not trade. It gets very choppy. It gets very volatile. And, you know, like I said, back when I first started trading, I used to trade in these consolidation ranges. I know a lot of retail traders do it. I see them do it on a regular basis, and they'll get into some trades and then, you know, they'll win a little bit and then they'll lose some and then they'll win some and lose some and win some and lose some, all day long as they continue to try and trade in here. But very often, a lot of traders don't know these concepts, so they don't know that they should be avoiding executing trades inside of phase B, inside of these consolidation ranges. And they don't know how to track and trade alongside with smart money. That's a very critical component of my trading system. Now, moving beyond this, once it's getting ready to move and break out of this range, I switch to a point and figure chart. So this is my point and figure chart for the pound dollar. And this was the trade from today. You can see this is the same basic range of consolidation that I was moving my cursor through with that previous chart. And then we get that last move to the downside, which is a test, and then it starts to break out and it gives me an entry at 1.3857. My target, remember the entry was 1.3857. My target was 1.3956. That was the first target, which paid 98 pips. The second target was 1.3974. So that generated 116 pips on this trade. And what I want to point out to you here, now I'm not going to get into details about point and figure because some people don't like it. Some people really like it. And again, as I mentioned, when I first started my trading career, I started researching what some of the greatest traders in history used to successfully navigate and trade around smart money or trade in the markets. And this is long before computers came along. What they were doing was using point and figure. Now, very often I run into people that will look at a point and figure chart of mine and they get a little confused. They don't want to look at it or they don't understand it. And that's okay. You don't need to understand it. I've been using this method for many, many, many years, and that's what's allowed me to stay in this business for 20 years earning profits every year. Like, I can live off of my trading results. So it is because of what I'm sharing with you here that I'm able to successfully do that. This helps me track and read supply and demand in the marketplace prior to this markup phase. So I say this very often with most of my trades. When I get into the trade, I can see where smart money is stepping in and I can see where the accelerated move takes place and I can trade alongside them. Point and figure gives me the entry and it also gives me a precise take profit level. So that's another problem with a lot of other services or a lot of traders, retail traders, when they don't understand how and why price moves around. They don't understand how to track and trade alongside smart money. They don't know how to read a chart. You'll notice that in that previous chart, I'm not using any indicators other than volume. I really don't rely on too many indicators. I just use volume and then my point and figure and the bar charts. And that's really all that's required to trade successfully. And again, that is what the greatest traders in history have been using over the last the last 100 years. So it works, it's proven. And you'll notice that very often when traders who don't understand these concepts, and I used to make this mistake too. I used to do this when I first started trading. I didn't know how long to hold on to a trade. I would get into a trade and I would be up maybe 12 pips or 17 pips or 32 pips, and I think this is awesome. Maybe I could get 60 pips for the day. Well, the 60 pips wasn't based on any reality. It wasn't based on me calculating anything. I didn't know how to calculate back then where price was likely to go. I just thought it would be nice to make 60 pips for the day. What would happen is that I would hold for 60 pips, and then the whole thing would stop and reverse, and I'd give back all of my profits. And I know a lot of traders do that every day. The reason is they don't understand these concepts. They don't understand how to read supply and demand on a chart. They don't know how to incorporate volume. They don't know how to track smart money and the behavior and get in when smart money is about to make a move, just like this morning. And they also don't understand how to analyze the phases of consolidation so that they can determine if they should be in the market or if they should be out of the market. And They also don't understand how to analyze and determine and distinguish between distribution and accumulation. These are very important concepts, but they've been around for hundreds of years. This is how the markets work. Every market works like this. I apply the same strategy regardless of whether I'm trading stocks, crypto, commodities, Forex, or indices. It works like this all of the time. This is really, really accurate. Every time I get into a trade, based on the data here and how I've constructed this chart, point and figure chart, I can calculate where the take profits are. These aren't numbers that I pick. These are numbers that are based here on the data here on the point and figure chart. So I do some private coaching with some of my students, and I tell, all of them, once I teach them this, we all say the same thing, that when we use point and figure, we all get the same entry, and we all get the same take profit levels if you use point and figure correctly. So you'll notice that when you see somebody else, there's so many different people out there saying that they know how to trade and they've been trading and they're experts or they're professionals, and many of them are not. Maybe they just kind of classify themselves as experts or professionals, but they may just have maybe a little bit of experience, maybe a couple of years. I don't really personally think that that's enough. I've experienced all these changes, the global financial meltdown. I've used the same system. It works all of the time, everywhere, in every market is what I mean. And so very often you'll see that a lot of these people will talk about some of these concepts, but they don't even understand them themselves. So you got to be careful about who you're going to take trade advice or recommendations from. Again, first of all, they might be using some simple indicators, and that's just not enough. That's not how it works. I did that in the beginning of my trading career, and it worked sometimes, but it's not consistent. So I find very precise trades, and sometimes I won't have any trades inside a consolidation like this, but I know a lot of retail traders will try to trade inside of ranges like this, and they get chewed up. They grind away at their account. They win some, lose some, win some, lose some, and then finally when it breaks out, they're trying to earn back everything that they lost inside a consolidation. They don't know when to stay out of the markets. I don't do that. I simply wait for one signal, one setup. I'm tracking the footprint of smart money, and I wait for my point and figure to give me the entry, and I trade it right to the target, and I'm done. I move on to the next currency pair. I do the same thing on the dollar Canadian. I do the same thing on the Australian dollar. And I do the same thing on the dollar yen and the same thing on the euro dollar. And then, of course, with oil, gold, silver, and cryptocurrencies, I trade Bitcoin on the weekends using the same methodologies. So it's a fantastic trade system, but you don't need to learn it. What's important is that you know that this is how I trade. And the other thing that I want to share, and I believe this to be totally true, when a trader is in this business, I don't think that you should ever stop learning. One of the things that I can't stand is when I see people on YouTube and Facebook and Instagram, they say that they're experts and they've learned everything that they possibly could about trading, and they know they've seen it all. I think that that's BS. I think that this business is so vast. I know professionals that have been in the business for over 50 years. And those professionals never say that they've seen it all. There's always something else to learn. And when I first started trading, the first couple of years, I convinced myself and I believed in it, and I wrote down in my journal every day. I told myself, I am never going to stop learning how to trade. There's always got to be some form of information, somebody else that I can talk to, another professional that's been in the market that, for many, many years, longer than I have, and they can give me some of that insight, some of that knowledge, some way to read how smart money is moving. That's really all that it comes down to, is being able to read supply and demand on a chart and know who is trading at any given time, whether it's the retail traders inside of choppy ranges of consolidation, or is it smart money acquiring at the lows prior to a breakout, tracking the footprint, using volume and some of the candle patterns or the bar chart patterns, and then identifying the breakout here with the point and figure? That's what I do, and I simply repeat it over and over again. And I never stop learning, and I never stop practicing. So on the weekends, I'm always looking at my charts, and I'm always, moving things back over to where they start, and I kind of, I role play the whole thing. Any particular trade, and I look for different opportunities on different time frames, and I love trading. I can't stop trading, and so that's why I do it. I do it on all these different time frames, and I do that wave counting exercise that you saw in the previous chart, which was basically what I'm doing is I'm counting the waves and the volume and the activity, and I can see as it starts to slow down. Let me show you what I mean here. So you can see as it starts to slow down, I see some of these moves to the downside, and it starts to take out levels of support. and then I can see when volume's kind of drying up, and then I see on these reversal candles, I see that volume's starting to pick back up again. And I'm also paying attention to the relation of these candles to support or resistance. You'll see that sometimes these candles are very small, they cover very small ranges. Other times they cover large ranges, and it's a very it's in sometimes a very key location to identify support and resistance and breakouts and confirmation. You can see that I've highlighted that here. It was a very important candle here. Not all of them, not every single one of them that looks like this, where you have a wide range like this, is all that important. But in this instance, it certainly was, and it helped me set up this stopping action, this support, this automatic reaction here at resistance. You can see these up thrusts that fail, and then it drops right back down. So I know not to chase these. I don't get into these trades right here because I know what's going on. I know there's going to be another retest. I know that there's just not enough volume, there's not enough momentum here to drive it out of this range. I wait for the retests, and then of course I wait for my entry on my point and figure to confirm everything. The reason I use point and figure is to get a precise entry. I know where my stop loss is, and I always know where my targets are. Sometimes these trades will pay 98 pips, sometimes they'll pay 116 pips like today, and then I get trades like this on the pound dollar. They don't happen every day. They certainly do not happen every single day. They happen probably once, sometimes two, maybe if we're lucky 3 times in a week for day trading purposes. But I can't guarantee that, right? Nobody can do that because we just can't. We can't control the amount of activity and the movement in certain currency pairs. We just have to follow it along. But very often we get into trades and they move this quick. There's very little retracement. I have very few losing trades, and if I do have a loss, I can earn it back right away. I mean, you can tell that if I'm using, like a 25 or a 30 pip stop loss, but my trades are paying 116 points or 116 pips, I'm going to earn that plus more on the next trade. So I had a trade here on the pound dollar a few weeks back, and it paid 169 pips on a breakout just like this. Other times we can clear over 200 pips on the pound dollar on a breakout just like this. It looked just like this for the most part. I mean, there were some little slight changes and differences here, but for the most part, the structure is the same, everything that I just described. So that's how I trade. And that's what you could expect when you use the TradeCopier. So jump in, use the TradeCopier again. I'm still offering that promotion, and it will go away at the end of this month, and I won't offer it again, and everything will go back to, the price of the TradeCopier will go right back to the original price, which was a monthly subscription. Right now you can get it for the whole year at one price, no monthly payments.